Kevin and Derek here with Kostoff and Company having a little coffee talk. You know, Derek, there has been a stigma to FHA loans for a long time that these are people with bad credit or the loans are harder to get done. Appraisals are harder. But truthfully, those myths are just that, myths, and they're not really true. And we may need to lean on these products a little more.
No, I don't think there's any question. So in one of our last videos, we talked about the loan level price adjustments coming for conventional loans, right? And that's affecting the average borrower, right?
And just to recap, the loan level price adjustments are basically making people with good credit pay a little bit more to offset some of those people with bad credit, and it's increasing the rates.
Right. So really, if you've got a 680 FICO score to 740, right, you're going to have the biggest adjustment.
And that's good credit. Those are people that are making their bills on time. That these are people are not struggling to pay their bills.
Right. So I ran some numbers just the other day because we talked about it looks like the federal government wants more people into FHA loans. So what's really the difference for the average borrower, right? So I ran some base numbers: $500,000 purchase price, FHA minimum down 3%, 3.5%. On a conventional, minimum down 5%, right? The interest rate on the FHA that day was 6.25. On a conventional, 720 FICO score was 7 3/8.
Woo, that's a big difference right there.
Right?
Yeah.
You've got mortgage insurance on both.
Yeah.
Mortgage insurance on conventional was higher than it was on FHA, right? So when you push it all together, the FHA loan would save the borrower almost $300 a month versus a conventional.
That is not chump change.
It's real money.
Yeah.
It's real money, right? And we all know that rates are going to come down in the next 6, 9, 12 months. So like we've been saying all year, marry the house,
date the rate.
Right? We'll do a no-cost refi in the fall or next spring or whenever it's financially feasible for the individual.
And FHA loans are no more difficult than a conventional loan. They are all underwritten here in-house. Our head FHA underwriter here in Colorado is one of the oldest numbers in the FHA pool as far as licensing. And she is super experienced. We are very fortunate to have Betty.
Sits 2 doors down from us too, which is kind of convenient.
And the appraisals really are no different. The only thing that they're looking at is to make sure we don't have cracked windows, peeling paint, and that the downspouts are attached, and so are the handrails. If you have all those things, you're probably okay. So unless the house is really trashed, you're probably not going to have an issue. So
really what we want to do is run the numbers both ways for you, because from our perspective, our job is to find you the best program available for your specific situation.
And there are other entailments with the FHA loan that we'll need to run the numbers to make sure that it does make sense for you to go that route. So give us a call, let us run those numbers for you, help you buy that new home. Kevin and Derek here with Kostoff and Company.